Let's finish off with this because this was kind of the main topic of our show tonight. I'd like to get Johnny's thoughts on it too. So now I am going to hold Johnny to this. And if he doesn't give us the answer that I want, then I will have to do some splicing and some things like that on the back end to kind of recreate it. But, people talk a lot about like in traditional finance, like portfolio diversification. So like, oh yeah, S&P 500 is top 500 companies and all this. Can we talk about why that may not be as great of an idea in crypto? And of course, we're all in this ecosystem that Richard Hart's really created with Pulse Chain, Hex, and everything else. What do you think are the benefits and the costs of each strategy, I guess, of like being extremely, because you can even be quote unquote diversified within the Pulse Chain ecosystem, and then you can stretch as far as to Hedron, Icosa, that stuff, and play around with it if you want to. What do each one of you think about like that? Like, how concentrated are you okay being? And I guess like in present day, with prices fluctuating a lot, specifically today, how are you kind of divvying up your allocations to this ecosystem right now?
I'm still really strong in Hex. My belief is that because of bonding, because of ratios, that Hex has to go up when everything else goes up. So I'm diversified to the point where I have a little bit of each in the ecosystem, but I'm watching more chances to buy Hex, and especially at these lower things. But the diversification is in the Richard ecosystem. You can't really diversify like you think you can, because they are bonded. People don't want to hear that, but that's the truth. And actually, if you notice, you can look at the charts. Hex has started with being worth 100 pulse. Today, it's now worth 140 pulse. We're getting closer and closer to that 200 that somebody said like forever ago. But yeah, so we're Hex is gaining in terms in pulse. And what we have seen so far is that when people sold their pulse and their Hex, or their pulse and their pulse X, everything went down. So we're seeing the bonding, but we're seeing it in reverse right now. We haven't seen the magnitude of what it's going to be like when the candles turn green. I think it's going to be really clear for everybody how bonded it is, and how some things are leverage plays on others because they're worth multiple of those things. So when that thing rises, it gets a multiple of it, because you can trade that thing for 130 or 140 of this, right? Mm-hmm. So if that ratioing continues to gain, well, now you're trading this one thing for 200 of these things. So if this thing's going up in price, but you can trade this thing for 200 of them, the price has to simply be what the ratio is, because you can trade that thing back for the 200 and then trade that thing out. So any way you want to look at it, the thing that's worth 200 of them has to be valued at that. You know what I'm saying? So there really isn't a lot of diversity in the Richard Hart ecosystem, because the pools are large. Now, some pairings were not made initially. Okay, that's what we're looking at. Some pairings, we just let the chaos happen and let everybody go their own way and pick their own sides and do whatever, instead of trying to it was a hands-off approach. I think it would have saved a lot of chaos and confusion and stuff if it would have been painted out. But we know Richard doesn't like to box people in and point them in a particular direction. He does kind of like to let things work their way out. And he's taken a hands-off approach. And, some of that could be because, people were pointing it out, right? And maybe he doesn't want to be accused of manipulation or something. Maybe he needs to, he's been taking a hands-off approach in all aspects for the most part.
Mm-hmm. Well, that was my thought originally when they removed the EHEX PHEX pair. Mm-hmm. It just got yanked, and I was like, I wonder why. And then I thought about it. I'm like, well, maybe because I did hear him say not long after that, the market will decide. We'll let the market decide. Obviously he didn't want to be responsible for any kind of, I wouldn't even call it manipulation, but when you bond it 1-to-1 or very close, it was very, very close to 1-to-1. It still isn't that far off.
4,000ths of a dollar.
Yeah.
Holding this whole time about 4,000ths of a dollar.
Yeah.
When we're dollars, 4,000ths of a dollar going to mean anything?
Right.
And I know people are saying 30%, 70% of a penny.
Yeah.
This gets different as we get bigger numbers, guys.
Right. So does it stay at that 30%? I doubt it. I think they go back and forth. I really think you're going to see premiums and discounts on both of them. And as time goes on, if that T-share rate really gets out of whack, people are going to take advantage of it. It's going to take a while.
Even if we move from, we're at 1.5 now, even if we move 1.5 to 2, that means half price T-shares on the other chain.
Yep.
Mm-hmm.
Which means double the yield on the other chain. So if you're getting double the yield on the chain, that's way more than the 30% in price.
Right.
So yeah.